Good afternoon, guys. Thanks for being here. What time is it? 2:33 on a Wednesday afternoon, hump day. Jax is going over to check out his bowl and make sure there's food and water in it. He gets nervous when I talk on the internet. I'm going to get a drink open while we're waiting for people to show up. What's going on with the market? I've heard it was selling off after I was on Twitter and I saw it selling off after the darn speech, I guess, or press conference. Oh gosh, you got to be kidding me. Now you got to be kidding me. Come on. At least we got volatility back in the market, and that looks awful, but it's only 0.5%. It just messes up your scale when you aren't moving at all. That looks like a flush, but it's 0.5%. I mean, my Lord. Not that I'm sure it screwed up some people's short option positions. I'm sorry about that, but it could get a lot worse. Well, anyway. And we did have, to be fair, a bear cross for whatever those are worth. Not a whole lot a few days ago. So the short-term momentum has turned down recently. And we have, and also now, just as of now, I guess probably both moving averages are red. So anyway, start looking for dips to buy, I guess. Either looking for dips to buy, or maybe this is actually the pullbacks here. I'm sorry. I know it's not being shared yet. I'm sorry. Yeah, get those cheap Alti shares. Heck yeah. Heck yeah. Pullback, I'm always obsessed with checking the previous POC. I don't know why I'm obsessed with that, but I am. And ES checked the previous POC perfectly. But they also flew right through this area where lots of times it turns around the market. They flew right through the low volume node, but they checked this POC. So let's say this is the next dip buy opportunity would be, in my opinion, would be this low volume node. And then I guess you could also, I don't know, I'd get that. And then maybe if that doesn't work out, reassess. I'm really short-term minded. I'd maybe get that for next Friday's expiration or something. Buy a call spread or something. Well, that sucks. All right. Well, it could be worse though. Let's look at SPY to get a better idea. Oh, and I already made my 2 dip buys on SPY, and it flew right. Didn't respect the first one. It flew right through that. It's like, hold my beer. We're going to go catch this other low volume node. Heck, there's a third one right here. Now, hang on. All right. Well, so there's our buy the dips. And then if it gets much under that, that's probably, we'll see. I mean, I guess, and then your next one would be checking back to this main POC. And I guess that actually would be a good one too. We don't have to put a yellow thing on there, but then also we have, we still have open gaps right here, which can also mean liquidity is still there. So that's what that's what I'm looking for places to buy the dip. All right. So the 10-year is up 1.2% and has kind of been going up for a couple of days. As long as it's under 4.5, I guess. Now, this hasn't hurt AMD. Nothing hurts AMD. Or AMD. AMD and AMD are invincible. Amazon's down a little bit, but Amazon looks about like the market, but Amazon, it's pretty well correlated with the market, so that shouldn't surprise us. Look at ARK. Kathy Wood doing a great job. They're up today. Coinbase is up today for a change. It's been pulling back lately. That's good to see. Crush is up, so that means Tesla's getting crushed or crash, whatever you want to call it. That's inverse Tesla. FETP's hanging in there. Google's hanging in there. What else? Anything else we want to look at down here? USO still strong today, and both VIX and VIVIX are up, of course. Not a real good look from Vivix, but anyway, all right. Well, let's go somewhere else and check out something else. Let's look at the high yield technical analysis page. We don't ever really look at that anymore. We just look at the list. Let's pull a maybe let's do a there it is. Let's pull a new top 20 list. I'm looking real quick to see if it changes or how much it changes. And it might, because the market's pulled back. We might have some changes. Okay, we do. MSFY is still number one. NVDY is number two. NVDW, number three. Well, those are both good. I mean, those are all three of them good. That's a great lineup right there. If 37% is enough yield for you, get NVDW. But if you need more yield, get NVDY. If you're somewhere in the middle, maybe MSFY. But especially if you're bullish on the stock market and those underlines. All right, so then we have AMD next, killing it at the 77% yield, and then QDTE hanging in strong at fifth, SMCY at sixth with a 105, COIW yielding 46, TSMY also yielding 46, but got a whole heck of a lot less NAV upside, about a third of the NAV upside. But, I mean, to be fair, TSMY is doing better than the one that's ranked after it, QDTY, because QDTY only got half the yield and didn't even get as much NAV upside. That's not usually the way it's supposed to work. TSMY is doing a good job, at least compared to QDTY. Then we have OR, GPTY, PLTW. Boy, PLTW is a good one too, in my opinion. AMZP is a good steady one, 20% yield, 16% NAV return. That's about 50-50. That's good. YBTC looking good, 41% yield, 11% NAV return for the quarter. SOXY has 9 and 26. Wow, SOXY is off balance. It's relatively low yield, but high looking NAV return. And that's kind of what we expect. Biggie's similar, although not doing as well on the NAV, but SOXY's semiconductors, and Biggie is just the biggest 50 stocks. So, and that Biggie is also a target 12 fund. So but I don't know why they're making less than their target. I need to look into that. It's probably a math problem. Then we have Triple QI. I saw that Victoria said that Triple QI was the ETF of the year or something, but I think maybe it means her ETF of the year or something, or maybe somebody gave it an award, and it is a good one. It is a good one. I'm always talking about perfectly balanced. And, this one you're getting 14% of your return in the form of yield, cash in your bank account, but then you still got 10%. You still got 10% out of the NAV in just a quarter. That's really good. But then also, there's another balanced one. AMZP is very balanced, 20% yield and 16% in NAV return for a quarter. But anyway, yeah, Triple QI is great. So we have 3 or 4 index-based issues on here. We have EGGS from Nest Yield. I think that's the first time they've got on here, but man, they're doing a good job. They're 20th. And then we have Triple QI, index-based, doing a great job. But then we have QDTY is beating Triple QI. Maybe Victoria doesn't know about QDTY yet. She doesn't like yield max. It's fine. But I mean, apples to apples, it has twice the yield and it has more upside. I don't know how they make Triple QI the fund of the year. If anything, it ought to be QDTE, right? I mean, QDTE has more yield, or we'll call it the same yield. They both have 11. But QDTE is also paying 4 times the dividend. Not that Triple QI is not a great ETF. I'm not knocking it. But we have some good choices. I mean, this eggs down here at 20. I mean, to pay it 13% yield and then return 17% for a quarter. I mean, that's on pace to do 68% NAV return, not total return, NAV return. So if it stayed at this pace, we could figure it up. It'd be 68% NAV return plus that yield would add another 12% to it. So, or actually now the yield would come out of that. The total return would be 68%. Because that's what the NAV would. No, it would add to it. If it keeps going like this, and it won't, it'd be like an 80% returner for the year. But if it keeps going like this, and it won't, you look at QDTE, it's going to make 40% and return 44% NAV return. That's really good. These are all really good. If you're into crypto, we have YBTC. YETH used to be on the list, but it's not on the list today. Maybe it fell off for whatever reason. All right, well, let's look at some other stuff, but I hope you guys like that. We looked at Alti this morning. We talked about Alti's trades. We mainly focused on this BMNR and mainly on UVIX. I don't think I missed anything. I think all these other ones are companies they've already had. I'm going to get back on the spreadsheet tonight, or the scripting where it can tell us what's new. The new positions and the closed positions and that kind of stuff. All right, so let's do some other stuff. Let's look over here at the index buffer report. Why don't we? Hey guys, good. Thanks for being here, guys. I appreciate it. There's 7 of you guys here. Kick ass. Kick ass. All right. Let's get out the old index buffer. There she is. There she is. I guess let's look at this real fast and let's go over to bar chart in case we probably need to look at trades. No one cares about this. Let's just look at this real fast. I mean, I do, but let's just see feed and 5E. Okay, feed and 5E up the most, down the most, S-fall. Gosh darn S-fall. All right, everything else looks great. All right, let's go over to bar chart and see if there's anything new coming up. See where the action is. I love looking at, instead of looking at stocks, look at the options, to find the most action. And that's what the covered call screener is a great way to do that. That shows you, a lot of these things in the covered call screener, I think you'd be crazy to really do a covered call on. Maybe not. I mean, it's up to you, but I don't like capped upside. But the covered call ideas, are also good ideas for other kinds of trades. It just shows you where call prices are way out of the money and way expensive. So you could do other strategies too. But I mean, some of them are so far out of the money, even though you have capped upside. I mean, even if you got exercised on SBET at 28, you're getting it at 19. But on the other hand, that this is the kind of stock that could be 100 in a year or something. It's a meme stock, so there's no telling. So you might just, the 3-leg risk reversals might work on these, although you're buying that out of the money wing for the call, and these probably have all kinds of call skew, so it may not be the smartest idea, but you do preserve some upside. You could run a covered call spread on these. A synthetic covered call spread might be an alternative also to try to get a yield and preserve some NAV return. But okay, so anything else new? What's this? Recon, hadn't heard of it. Open, don't know. G Pro. I just ignore the ones that are $1 or $2, but they're interesting to look at. Sometimes this one might be $10 next week. I mean, so okay, don't care about those. But BM&R, they got to at least be double digits. So SRPT. Now this one has been in Alti before, I believe. Now let's see what the deal is on this. So I also don't like the ones that go out too far. This goes out 51 days, so it's a tasty trade type play. The 21 call is incredibly richly priced. You could get just by selling it, you get 9.7% yield, but you can actually, and that comes out to, well, hang on. And you could get 41% NAV upside, the 58 probability of profit. So here's an idea. I know that in our Discord, a guy named Scramble likes to do strangles, especially around options. He's a tasty trader and stuff. So yeah, you may not want to do covered calls on all of these things in here, but wonder if you're looking for a strangle to sell. So, I mean, when you sell a strangle, you want an overpriced call to sell and an overpriced put to sell. Now, you don't have upside, but that's fine. You could also maybe say, okay, well, especially if this is an earnings stock, that's, it might also work if there's earnings that same week or something. You could sell the 22.5 call and get that 9.7%, and then find a put and sell a put and do a strangle. So just because it's a covered call screener, there's plenty of ways to monetize overpriced calls. Selling strangles is one of them to potentially monetize overpriced calls. Now, this bull's interesting to me somewhat. It goes out 51 days also, but I just like these ones where you can get a call super far out of the money and get a ton of money for it. BTBT, don't know what that is. It's a good ticker though. Let's see. Then the only other double digit one we have is, well, we have two of them. This one right here, QBTS, selling at 17, the 21 strike call is jacked. Okay, what do we have on earnings? Let's go over here to option strat. Let's do a Meta earnings trade. I saw that Scramble, speaking of Scramble, is put on a strangle in Facebook, and he posted in our Discord. You should join our Discord if you aren't already in there, especially if you like to talk about options and high yield funds. But we talk about everything. I mean, we talk about other things other than high yield funds also, but we do a lot of option talk. So let's see what I can do. Now, I'm going to go the different direction of him, because I think this Facebook is the kind of thing that could have good earnings and go straight up or not. Anyway, first thing I'm going to do is I'm going to look. I don't have Tasty Trade open right now, so I'm going to look for call skew, but I'm going to do it. It's easier to do it in Tasty Trade, but we can do it this way too. There's the at the money call. And okay, we need Meta. Okay, so the at the money call is 52 deltas, and we're going to go out to like a 20. 20 is way far out there because this thing could really move. And it's it's not the delta we care about. It's the gosh darn it. It's the IV. So the out of the money IV is 52.9. The at the money IV is 54. Yeah. So this could set up for a risk reversal. I mean, so watch this. We'll switch this to put. We got a put spread right here. We have a put spread, I should say. We just want to collect about a third of the risk. We're just going to eyeball it. There's tons of liquidity in this. Did we do one in this one the other day, or was it Microsoft? We may have done one this. I may have demonstrated this. But anyway, we'll do it again anyway. We may do another one tomorrow. 237 on $1,000. That's about 25%. I like to do a little bit better than that. Maybe. There we go. Look at that. 320 on 1,100. We do it twice. And then we add that out of the money call. And that's why we check the skew to make sure that, that the IV of the out of the money wasn't 10 points higher or something, because this is our expense. This is probably going to lose money. This is a hedge. All right, let's see what delta. I like the 20 about. There's a 17. There's a 19. Okay, so we're going to have to, you can see we ruined our credit here. So we're going to have to scoot this. Let's scoot this in about 5 points. Yeah, scoot it in another 5. Let's scoot it in 10 points. Well, gosh darn it. Let's do this. Let's go to 675, 350. 155 on, all right, gosh darn it. Let me go just a little bit closer. All right, there's a 15% yield. $352 now on $2,600 total risk, maybe more like 13% or something. You maintain a little bit. Oh, that's why it messed this up. Hang on. I was going to say that sucks. Hang on. Watch this. Yeah, we could do a lot better than that. We always do these 2 by 1, or we'll do a 1 by 1 by 1 if we can get away with it. Heck yeah. Now this is what we want. We want to move this as far out of the money as we can. I used to call this the loaded dice, but the theory was that you're trying to make a trade that's real easy to hit. So it's 3.2% out of the money. What time is it? 2:54. I got to get this done and get a post in case anyone wants to do it. All right, 407 on $3,000 risk. It's expensive. You got about 4% buffer. If you guys aren't bullish and you'd rather have a bearish one, we can do a bearish one tomorrow. These earnings aren't till tomorrow after the bell, or they may be today. Anyway, let me get this posted. Let me get this baby posted. All right, let's look really quick. Old earnings hub. Let's see what we have coming up on the earnings calendar tomorrow. Well, I was talking more about the financial calendar too. Come on, come on. Gosh darn it. Continue with the just show me the darn thing. Okay, so Facebook is after the bell, and so is Microsoft. Sorry about that. Okay, well, so tomorrow we'll do Amazon, Apple, and Coinbase. I'm not going to do that one, full disclosure, because I don't want to lose $3,000. I've had a good year, and I'm not going to throw $3,000 away on one trade, especially, I mean, no telling the markets. Who knows? It probably worked out fine, but I'm going to reevaluate, see if the market bounces, and look at Amazon, Apple, Coinbase, MicroStrategies, one of these tomorrow, one or more of those. Then as far as the calendar goes, I guess you don't get the calendar unless you sign in. So, but I'll remember, I think it was core PCE and something Thursday and then something Friday. We have a busy week as far as that kind of stuff goes. All right. So, hey, Mark, thanks for being here. Don't worry about being late. Yeah, I hear you. You got to watch those right up to the close some days if you want to maximize what you're going to do. And yeah, I get it. Sometimes, do you ever just let them expire, or do you always cover them? Sometimes if they're super far out of the money, you can take a chance to let them expire. But anyway, I know that's real stressful right around the close. Marcus got cheap Alti shares. Okay, so I felt bad this morning. I had to go kind of early, and Ethan was asking me some questions and put some tickers up there, and I didn't have time to mess with it. So I was hoping he'd be back here. He'd put the tickers back up. There's a ticker you guys want to look at. That's fine. Put it up there. But in the absence of that, I want to show you something I got. I really like these guys over here. I've been communicating with the guys at Twin Oak Capital. So this is some of their literature they gave me. Me and Scramble were actually looking at this, but a lot of other guys might be interested. I just had an option question that stumped me, so I bounced it off Scramble. But they have some kind of trade in here called a gut strangle. And it looks really cool. It doesn't look like you can lose. It looks like some kind of arbitrage. Anyway, they also do box spreads, which is an arbitrage. I think a gut strangle is similar to the box spread. And but anyway, so this guy right here, Greg, has agreed to jump on a call. I haven't got it scheduled yet, but we're going to get him on the station. He's a smart guy. Went to MIT. Check this out. He worked for Dr. Michael Burry. He was at his family office. And then he was not on that. He's a pilot in the Navy or in the Army. So I'm thinking probably a helicopter pilot. And those guys I've always respected the heck out of anyone in the military, but especially pilots and especially helicopter pilots. My gosh. Anyway, so I'm really looking forward to having him on. He's agreed to jump on a call. But yeah, so what I wanted to talk about is, and I know you guys have already seen this, but some of you guys have, but in case there's people that are new watching, they have their tickers are T-Oak that we're going to be talking about. Now, T-Oak is like a box spread, or it's like a cashy, or not really like a cashy. Cashy pays a dividend. This doesn't, but it's the steadiness of a cashy or a box spread. So they have T-Oak, but then they have TSPX. Oh, maybe it's not out yet. Oh yeah, it's not out yet. Okay. Well, and then they also have something called uh, SPY A. Okay, and those aren't out yet. Well, yeah, this one's out. Brand new, but we looked at this the other day. These guys do callers. When I looked at the positions, they have stock, they have some VU. 43% of their holdings are VU. They have some swaps, but then they actually own some shares in some good companies like Snowflake, Block, Microsoft, DoorDash. And on those blocks, they predominantly look like they've sold calls and bought puts. So I like this right off the bat. And that's what they're trying to do. It's supposed to, they aren't going to pay yield. It's going to be total return, but total return with lower volatility is what they're advertising. So anyway, and I thought TSPX was out. Let me check one more time. I guess it is not. Okay. Well, maybe we can talk to him about that. All right. If there's anything else you guys want to talk about, put it in the comments. But yeah, it is out. Of course it's out. Okay. Who knows? Maybe it's not on FinViz. Maybe it is. I was going to say, maybe it's not an ETF, because sometimes stuff that, well, they still put it on FinViz if it's closed-end fund, but you don't get positions. We saw that this morning. Anyway, it's out, so it's fine. It's just not on FinViz. I just wanted, you guys have all heard about this that are here. There's 12 of you here, and I've been talking about this a bunch lately because I'm obsessed with this topic, and I've posted stuff in Discord. But he had a trade that I really couldn't figure out. I asked him to send me a white paper. That gut strangle, I still don't get it. Scramble didn't really get it either. I mean, I wouldn't think it's possible unless you leg in to the position separately. And Scramble concurred with me, but he said, but I wouldn't see how that would be a great strategy. That wouldn't be something consistent. And when you're legging into positions, you're playing the market. And this is an arbitrage. This is supposed to be something you can just put on. So there's obviously still something that I don't understand, but when I get him on, we'll ask him. And since it's not Jay or whatever, I'll probably just ask him if he has 30 minutes, but I think that should be enough time for us to find out about these three things. And I'm going to ask him some questions about the Army. And he also went to West Point. He's a sharp guy. He went to West Point, MIT. He's worked for Michael Burry, and he flies helicopters. I mean, that's my kind of guy. Yeah, but I appreciate that, Dan. It is out. Yeah, so we're going to get some cheap alti in the morning. So the market closed. Let's see how it closed. Let's see how the darn thing closed. Oh my God, it's down 31 basis points. But that looks like a lot. It bounced into the close. Now, I'm telling you, check this last POC. But it bounced into the close, so that's good. So if you're a short-term trader, you could have bought the close and set a stop down here below, or got out if it takes out the low tomorrow. And I would have aimed for, if I was trying to do a spread, I would have aimed for it to go back into balance, for it to snap back up to this prior POC. In other words, trade between the POCs. Sometimes it'll back up and test an older one, make sure the buyers are still there, then it'll go back off to the newer ones. Then what it's supposed to do, if it's a bullish market, is make a new high, make new highs until it gets too high, and then come back and check a previous POC. Maybe next time it'll pull back and check this POC. We'll see. We shall see. But yeah, that's been a great face ripper. I mean, even just on this little short-term cross, it was at 6,300, and it's uncrossed today. So you would have been out, but you would have gone to 6,300 to 6,400 in since the 17th of July in 2 weeks or something. Not even. That's some good momentum. It's hopefully just a pause the refreshes, right? Just kind of like this. This was good momentum, but then we had a little sideways action. They probably checked a previous POC or two, consolidate for a few days, get some buyers on board. Look at this. They set a new low right here. I think I can't see. Yeah, that's a tail right there. Look at that. They set a new low, and because I'm always the person that buys puts on that, but They do that on purpose. They take out the previous low, stop run, and then they sell puts to people like me and then rip it the other direction. That's the way it works. That's the way it works. Anything else we need to look at? Alti, I'm trying to think. Anything else I haven't shown? I think it's good unless Ethan comes in here and puts those things up, you know, and puts those tabs up. And Ethan, if you're watching this later, sorry I couldn't get to those today. We'll look at them next time you're here. We'll look at them tomorrow. I definitely want to check them out. But of course, I didn't write them down. There's a bunch of them, but I definitely want to check them out next time you're around. Pop in here, put them in Discord, and I'll you know, or whatever. And that way we don't lose them. So whatever, you know what to do. So Red Sox, what are you doing? But if you don't buy Alti at a bargain price, it could take 8 weeks. Yeah, correct. And it's because of that super duper high yield. It's you know, it's a tax on the NAV. But you know, it's still, Alti still has very good total return and very good yield for sure, and decent NAV. The last time I checked, Alti's NAV was up about 6% for the quarter. Not nearly good enough to be on the max factor list, but pretty good. Okay, that's interesting you asked that. I happen to have one of those open in a tab, so let's just look at that real quick. So this is Nest Yield. I met the guy that owns this company. I forgot his name, Manuel, I think. Miguel. My name's Miguel in Spanish. His name's, I think, Manuel. Anyway, great guy. Does a lot of business and has a big money management firm out of Los Angeles, and he does a lot of business in Central and South America, from what he was saying. Anyway, so they have 3 funds. They have EGGQ, EGGY, and EGGS. EGGY is a yielding fund, but it's not the kind of yield that we like. It's like, I think it's like bond type yield. Last time I checked it, it was the top 10 holdings. Well, let's just run it through dividend return real quick. Oh, I was checking it, EGGY and EGGQ. We'll just run these two. But anyway, then they have the ones that I'm more interested in. You guys might be also, is EGGY and EGGQ, which are SPY and Qs based. But I mean, this yield fund's hung right in there with the growth fund. So you know. And the yield fund is, but look, so EGGY has paid a lot higher yield. It's paying about 10% on a half a year. So at that rate, it's 20%. This is something we might be interested in. Heck yeah, I didn't realize. Excuse me, EGGQ is more growth oriented. I did a review on these when they first came out. Maybe I need to do an update on them. I have a good video coming out today. I've already written the script for it. You guys are gonna love it. I'll teach that in a second. Anyway, EGGQ is paying, 98 cents for half a year. So call it $2 for a year on something that costs 40. That's not very, it's 5%. It's a growth fund. 5% is good for a growth fund. I mean, that's triple what the Qs pay, maybe quadruple what the Qs pay. So good job. Now let's look at EGGS, and let's compare EGGS, or it's EGGY, Y for SPY. Or no, it's EGGS. Y is for yield, and EGGS is for S&P. Okay, so well, look at that. The Qs are beating it, and that's exactly what you'd expect. The Qs were also down more in the pullback. We've looked at this a million times. SPY down about 15%, Qs down about 20%, and this was in line with the market type pullback. They didn't get extra downside, which is good. They didn't have any buffer. It didn't really look like. But that's fine. It's fine for growth funds, and because you could see both of them shot right back up, and they're doing a great job. EGGS pays a lot better dividend, and that's anyway. I need to make a follow up on this, but EGGS it looks like you have growth and a pretty good dividend. You figure that would be maybe $10 for a year on something that costs 40, 25% plus growth. Heck yeah. Hey, Froggy, how are you doing? All right, guys, I'm going to get out of here. I've got to, well, let's look at this video real quick. Let me show you my thumbnail. I may not have the thumbnail up anymore. It's here. As soon as it comes up, I think this is the tab. Anyway, the video is on the new fund out there. Its ticker is KULT, Cult. Not really. It could be, but get this: it's Curve, and it's their version of Alti. So I was joking. They don't have a ticker yet, and they don't have an expense ratio. It's just a preliminary look at it. But I was guessing it might be KLTY or KULT, and I mean, and that wouldn't be bad. I mean, yeah, Alti to get some new competition soon, and this is going to be really this. I think this will surprise you guys. This will be interesting. So, what do we know about? Just real quick, what do we know about Curve? Curve has steadier nav, so to speak. You know, but why? But it's more, you know, why do they have steadier nav? And the answer is, as you guys understand, because their yield is less. So I would expect this to be a steadier nav version of Alti. So but there's some other surprises in there. Watch the video. I'm going to record it here in about an hour. Maybe it'll be out by 5 or 6 or something. But watch the video and see what you guys think. But this is my latest banger. I'm going to have the Patreon piece, also video and all that kind of good stuff. So probably, let's say, I'm going to try to have it on at dinner time, 5 or 6. I know that's really dinner time for old people. But you know what I mean. And I mean that I'm 58. I'm old, but I eat dinner like a 9 or 10. I eat dinner like a millennial, I eat dinner like a single college guy, you know. Yes, you're welcome, Austin, or Red Sox and Froggy. Yeah, be watching for the video. All of you guys be watching for the video. It'll be out soon. Like I say, and anything I didn't get to today, if Ethan's watching, whatever, we'll all those tickers, we'll look at those in the morning, or any other tickers you want to look at. I love looking at tickers. All right. Later, Mark. Later, Froggy. Later, Red Sox. Later, every one of you guys. There's 11 of you guys. I really appreciate it. All right. I will talk to you guys later.